Hello, friends and traders. Welcome back to 369 Ecosystem, where we offer great insights into the laws of nature, where the laws of man become one with the laws of nature. So, here let us revisit our tracker for the market. This is ES chart, and what we are looking at on the screen, we just revisit these things once a while because these are very large swings. So what we have here, bunch of lines. So let's explain these to you one more time. These are VWAP lines. This is VWAP, 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 and these are the averages of these VWAPs. All right. So this big fat line you see here is a VWAP. The yellow one is also a VWAP. This is a VWAP of the close of the prior day. This is, kind of looks like a step function, right? And then we have averages of all these VWAPs, which is slowing down the trend. It's giving us the, it's like acting, you can think about 200 moving average. So we have 160 and 200 moving average of these VWAPs. So there's no reason why you cannot create this internally. The coloring scheme on these bars, when the yellow one crosses below, you can see here, we change the color. When the yellow crosses this white line here, we change the color right here. So it is just simply giving a synthetic visualization for us right here. It crossed below the white line. But the good thing about all this, we are using the value chart. Where is the market value? All right. So now we know what we are looking at. On the bottom, we have an oscillator. On the extreme bottom, we have the volume of which has been normalized to be only on the positive side of things. And we are using some on balance volume. We are using some RSI. We are using some Tesla formulas behind the scenes. We're looking at the we're doing some squaring of all these things internally. Let's not get into the quant side of things, but let's figure out what to do, how to use it, right? The first rule obviously is we want market to be on one side or the other side to take long and short. So if it is below this, we want to take shorts only. When I say below this means I'm talking about these two lines. Above this, long only. Below this, shorts only. So where are we right now? We are here, longs only. So what we can do about it to see where the market is going to go. So we talk about the measured move. So we just take a box and we go back in time. How far have you gone away from value, right? That's all there is. So let's go back and check. There's no rocket science behind this. So measured move means how far are you off. Okay, so the reason we want to talk about this is because market is, if you see here, spiraling across these lines, right? So, all right. So it is just rotating up and down between these lines. So what we are saying is, as you go off away in either direction from this value as a base, we want to see how far did you stretch. And we're going to take this box and we can assume that is the impulse we want to keep measuring of this. And there are a couple of things we have to do. Let me just walk through this. So, all right. So market is here. I see how far did it go from this value. This was the structure which we saw the maximum stretch. Now I'm going to keep the bottom at this line. So this is rough estimate. Okay. So it went again here and we got a pullback. Now there are 300 point moves. Right, you can take options, things like that. So I'm gonna just keep on moving. There we go. I'm keeping my height, which gave me impulse, first impulse after it moved, first impulse, pullback. Now I'm trying to say, okay, this is what are you doing? So we got another, we picked up the top. All right, I think you should have seen this in the prior videos. This is how we do it. All right, so now on the other side, now the same impulse can move on the other side as well, and sometimes it doesn't. So what we have to do is maybe we have to do a new one, remember, right? So this is again, as I said, it just don't ask me a red one, white one. It's just a rough estimate of knowing something. All right, so I'm just okay, it broke here between these lines. I'll just put it here, and I'm just gonna do it here. Now if it is just a pullback, if you look at here, again said 50, if you just move from here to here, if you look at this is around 50, right? Maybe 50 roughly, or 61. So we can just see that, okay, we are getting at this. Now I'm looking at the impulse. If this impulse vibrations are correct, so this broke here, where am I going? If it is a pullback, right, this is the 50. This is the 50, somewhere here. We can measure it properly. Let's just say this is 50. Eyeball it. All right. Perfect. And now this is coming out from this value line. This is impulse is coming here. So this could be 61 right here. All right. So there we go. This is Fibonacci retracement of this swing up right here, and then we have a measured move. Market held one time, second time. All right, now we are gonna keep the same impulse until we find a reason to do it. Now this one, it broke again, and we double it. So let me clone it. We're giving you some ideas because you guys are helping us with your time. We want to help you something back in return. There we go. Boom, boom. Right? Double. So energy has doubled. The impulse has doubled. As we talk about this energy being doubling, or it's like going halving, right? Same thing. We gotta just be doing 2x or divide by 2 or multiply by 2. You could have gone to 4. Well, there we go. So we got this idea. And we also have given some ideas when we see a balance point. This balance point can also be the midpoint. So market came here, make this impulse, it made this impulse, it makes this impulses over and over. Now we are looking into this as a bigger moves. All right, this is my impulse, is holding here. Now this could be either going up or going down. So this is a 50 or 60 roughly. If this is just a resting place, it can go up the same distance, it came down, or down the same distance. So it went down the same distance. Now we are getting a double confirmation where it is going based on the impulse and based on this. All right, so we can also do what we call as tracker. Let's do this too. Let's clone this again one more time and rotate. Keep on coming. So we were hoping it will go up here. It did a little bit twist and turns, and it broke down. So now I'm aware of it that this might be taking to the double size of the impulse. So that it does. So I'm just gonna keep on going, keep on going, and you can just see here where roughly somewhere here we got this and got this impulse, right? So that is how it is the energy. It is the doubling factor of these impulses which caught it, right? Mostly. All right. So now if you want to say, hey, I need to change my measurement tool to maybe a little bit bigger, but this is the maximum stretch we got, and let's see how it goes. So we can keep this at the bottom. If it's gonna go get the impulse, we got the impulse right here to the top, right? Right here. It could be as simple as this to see where the market is going and don't be confused. At the same time, be protected, right? In this business, there is no 100%. All right. Now I'm going with this same approach. Just okay, I broke it. Where am I right now? So I got to do this double, clone the drawing. So initial impulse I will double. Let's clone it again and stack it. And this one we can just keep on moving, keep on moving, keep on moving, and there we go, it hit it. So same thing happened here. So that's why we say measure, have 2 of these ready, right? And that's what happens. So aren't you the world's best analyst? Better than Wall Street, better than all the TV stations, right? There we go. But you got to have this value area tools. If you don't have these tools, I'm doing it on multi-charts, you can do the same code. It can also run on TradeStation. Because this is very simplified ideas of what life is all about. So right here, the impulse, see that? You got the bottom. So who is saying that you guys are not the masters of the market? You are, right here. We're telling you this for 2 years. And this is where we are right now. Just keep on tracking, right? So sometimes it'll just measure it right vertically up. Sometimes it just breaks and doesn't do it. So these are some probabilities. So here, okay, how about this big one? This is the big one actually. I just copied the big one. Okay. So if market, I can just keep on tracking, right? So what is happening is you may have some questions. Hey, okay, why didn't I keep going? Well, if it has to make new highs. If I'm going here, once it vertically meets me, unless it makes a new high, I will not move it, right? So otherwise you'll keep on tracking. And if you keep moving it, you can see here, it is not reaching what we're expecting it to reach, the loss of momentum. All right. A little bit of practice, a little bit of thought process, a little bit of checking it out, right? And the tool, I think, I just told you, is a daily VWAP, 1 day back VWAP, the blue one, and this may be a little bit longer, and this is just the averages 160 and 200 of the VWAP. That's all. All right. Okay, so okay, now let's see how the other tools can help us process this. The bottom one is volume. When we are looking at going long, I want this volume to be close to 0. You can see here. So if the impulse has come down, we are thinking this is kind of again same thing, 50, right? Keep an eye on 50. Gann said 50. 50 is the most critical thing, halfway point. Right, there we go. This is 50 or 61. That's roughly same thing. I want to go long, no worries. Look at this, volume has to be close to 0. So what has happened here, we have convergence of volume sitting, accumulation happening and right to blow, and it came down to our measured move. And we also have other things, say 54 and whatnot, but you got the idea. Okay, there we go. Look at the oscillator, right to go. You can use any oscillator you like, no worries. Let's try this one. Same thing, right? The oscillators here is on the bottom side, and the volume is sitting close to 0. We don't want to be on the volume on the top side, and so we have to be careful. Let it settle down, come down, and then go. When you break it and you come back to retest it close by, look at the volume. So let's look at the volumes only, and let's say the trend has changed and you want to catch it. Okay, let's say you don't want all this hard work, no worries. Right here, trend has changed, come down to 0, go long, come down to 0, go long, come down to 0, go long. Okay, this is like almost 0, but this is how I can do, right? I don't want to be on the top side. Let it come down, pull, come down, pull on the bullish side. Same thing when we are going to go short, I want this to be on the upside. Now the upside is going to be tricky because remember this is not a bounding scenarios where we have the boundary conditions on the upside, bottom is 0, but on the top it can go very large, right? So what we can do is look at the peaks of the participating operators on a given time window. So every 2-3 months there may be a different kind of participants in the market, so they may be creating different waves in the market. So what we can do is look at this, create these time segmented trend lines. All right, so let's do a clone of this. Okay, we got 1, 2, 3, 4. That's fine, right? That's what, and then we can do more. Okay. So as you can see, tops are challenging. Let's stretch it. So this is how we see the volume play out. Okay, so when we are on the downside, we are expecting at least if this move has crossed the balance point lines, the value lines, we are expecting at least one measured move. And then what we are expecting is to, if you want to take a short side, we look at some vibrations hitting on the top side. So let's see, there are more vibrations also here, but let's see if we can get to the bigger ones. So it has moved down, we got this line, let's extend it backward. Okay, I'm just doing it roughly, you got the idea, right? All right, so okay, so we are gonna go short, market is going down here. I want something to come up to a certain level. This was the level, and now I keep missing it. If I just draw it all the way, it's touching in lots of points, like lots of points. Okay, lots of points. Again, we are dealing with volume, so, and it's always on close. So when it gets close to the line, we just broke it, let it go up, and look at this oscillator also, right? This is it. So when this is on the top side, retesting one of those trend lines, and this is pressure is very high, this is not going to go to the top side. It maybe not, right? Just broke recently, there we go, broke it hard. First attempt to go and hold this. Look at this, volume was not even there to go anywhere. This guy is very reactive, he said short. This is a thing short, this is saying short area, right? Now this is better short. Which short is better? This is the best short. Why? Because look at this. Both of these things confirmed. Here, not so much here. Good. But remember, here volume is close to this. So these are the two good shots I would have definitely taken. Right here. Definitely taken here. This is no shot. This is good shot. Now, if you have not been able to sustain this, when it started coming down, we know it's going to the second phase. Second phase means energy is going to double up. That means the measure move is going to double up. So this is a good shorting location. And last move came in here. Okay, so the bottoms, you can say long here, long here, long here is much easier. So even if you take one side bias of the market, when this happens, right, you're still gonna win. And remember, this is the trend chart, Renko 36, 369, right? So Renko 36, this has nothing to do with time. So it is giving you good trends because Renko is designed for trend. That's what it is designed to do. Okay, so let's extend this further all the way. So I'm on this short side. So shorts are a little bit, when it breaks, I'm expecting it to break and go to this level. I have to use my oscillator for sure in conjunction, in sync with the, let's put it in sync with this volume. So if I draw this one volume also right here, you can just see it's saying okay, you could take a shot, right? Because everything is below this. I'm already short biased. There we go, right? Boom. I don't want to be on the bottom side, so let it be on the top side, and then you have to do some trend lines that I just explained to you. Let's extend it further. Let's extend it all the way to the right side. I should have taken something. All right, shorts only. Short here, short here. This again is a short here, did not work out very well, that's fine. But we're coming off this, it is holding, right? So we know we also have apex going on. We already discussed that pattern earlier. So this is in each impulse, you know, you can get some good moves if you're trading options, right? You can do back ratios, 3-to-1, 3-to-2. So you run not, or just vertical spreads or just simple calls and puts. But this is, I think, one approach of doing it. All right, so again, when we went back to the upside, I'm now looking for to go down on the bottom. So this is where the trend change, that's why color is changing. So this is good. Look at this. Both of them synced up, the oscillator and the volume. Volume at 0. This is a pullback, and there we go. Take off. And then again, if you missed it, this was another chance. Right here. 83. Some points came. 100 points is like $10 in SPX or ES. So this is where we are. So if it is going to blow, it double this up, and you know where we're going based on this philosophy. So let's do this. All right, my friends, there it is, right? And if it's going to do a pullback, we have not seen a new impulse which is massive. If it goes below this right here, if this is the top, let's do some probability measurements. Now this is just, we're giving it for public. So here it is, bottom of this or bottom of this. So let's put some ideas here. This could be possible good pullback. Another good pullback. So once pullback happens in this level, look at the volume condition, and same thing like here. We had a measurement move. We wait for it to hold and let the volume, if you want to take it early entry, without beginning to wait for this breakout. So if it comes down, depending on where these lines are going to be, so it may bend a little bit like this, it can just come down, do a retest and go. It could be just something like this, right? Little bit break and get out of it. Anyways, look at the oscillator conditions of your oscillator and the volume condition at that point, but you know these levels. Actually, let me put the levels using pricing mechanism. Put on the top too. So right now, since we are above the value line, longs only. If it comes back to this line, at least this line means two lines. Come back, pull back here. When it comes, you can look at the condition. You can just, unless it flips on the other side, you have to keep going longs only. Here it flipped, right? All right. So I hope this will give you some things to think about and some values where we are possibly going to vibrate. This is based on the impulse moves, measured moves, and doubling those measured moves. Thank you so much.